Monarch Networth Capital Institutional Equity Desk has initiated coverage on Mayur Uniquoters, a compelling consumption-based story. Through this video, let's learn about the company and the reason behind MNCL's coverage. This report is a result of MNCL's strong research philosophy and aims to showcase new insights with solid investment rationale. On a Rs 1,150 crore mid-cap company named Mayur Uniquoters. Why is Monarch covering Mayur? MNCL's coverage of Mayur Uniquoters is driven by several standout features. Here is a glimpse of the following. It is the largest Indian synthetic leather player, currently undergoing an interesting phase, wherein it is set to foray into the PU synthetic leather business and commence dealings with many European auto OEMs. Over the years, Mayur has reported best-in-class margin profile, hitting above 25% zone, something unheard of in a business well dominated by unorganized players. The company has a very strong clientele in both auto and footwear segments in domestic market. But its presence is not confined to Indian borders alone. In the international market, Mayur is in business with blue-chip clients such as Ford, Chrysler, GM and Daimler, a feat which none of the other Indian leather company has ever achieved. Mayur is trading at just approximately 13 trailing 12 months PE, almost 43% discount to its own 5-year average TTM PE, and hence limits any downside risk from here. Strong business fundamentals along with high return ratios, strong net cash position and consistent payouts to shareholders by way of dividends, buybacks make Mayur a compelling investment proposition. With expected better performance in the future, the investors will be rewarded through both earnings growth as well as valuation multiple expansion, and hence, Mayur can generate huge wealth for investors in medium to long run. What is Mayur all about? Who is the man powering the vision? Promoted by an industry veteran, Mr. S.K. Poddar in 1994, Mayur is the largest Indian manufacturer of PVC leather and caters to marquee names in footwear, auto, furnishing, leather accessories in Indian as well as international market. Here are a few key features that you need to know about Mayur. A dominant player with focus on R&D and backward integration. In the domestic PVC leather market, Mayur commands approximately 11% market share. The company has 6 state-of-the-art coating lines with backward integration. The company is committed to strong R&D, which can be testified by DSIR, approved R&D lab facilities. The sheer size with utmost focus on quality has helped the company in positioning itself as the favored supplier of OEMs. Only Indian player working with auto OEMs in US and European regions. There's something that Mayur can boast that nobody else can. The company's plant has necessary approvals for supplying synthetic leather to the US and European auto markets and is already audited by foreign auto players such as Ford, Chrysler, GM and Daimler. Mayur is an approved vendor for all these marquee names. The company is in talks with several other European auto players such as BMW and Volkswagen to get their positive nod. Foray into PU creates new growth opportunity. Mayur is not just a company content on resting upon its accolades. After garnering success in PVC leather, Mayur is foraying into the PU leather business, which is approximately 35 billion opportunities in India, currently dominated by Chinese imports. OEMs are ready to support Mayur with better pricing, as it will provide them comfort in terms of quality, services and timely supply. We believe that Mayur has all capabilities to replace Chinese imports of PU leather and can generate approximately Rs 1.5 billion sales from the PU business by financial year 22. Mayur's PVC business is set for a steady growth. In the footwear market, the market share of branded products and organized players will keep growing. Considering the drivers of footwear industry and Mayur's strong focus on organized players, we believe that the positive growth trajectory of the branded footwear players and Mayur will move in tandem. Auto segment sales will be on track as slowdown in the sector subsides. From here on, the future looks bright. Quality of earnings and corporate governance. The reports highlights how Mayur has fared well on quality of earnings and corporate governance aspects. Mayur has 61% promoters holding, whereas institutions hold 20%. Mayur's financial standing is healthy and only expected to grow more robust in time. Valuations look compelling considering strong fundamentals. So finally, what does the analysis reveal? What have the analysts learned from their findings? MNCL analysts remain convinced with Mayur's long-term growth strategy despite challenging demand environment in near term. Mayur is estimated to report 14% CAGR in revenue and 10% CAGR in earnings over FY19 to FY22, coupled with maintaining ROE profile above 15%. MNCL initiates coverage with strong positive stance and target price of Rs 360, 17 times FY21 expected earnings, offering 41% upside in a year. In medium term, with recovery in its footwear business, scaling up of the PU business, growth coming back in auto industry and addition of more global auto companies as clients will lead to PE multiple expansion and promise stellar return. The verdict is a strong thumbs up. Analyst credentials. MNCL's analysts Anubhav Rawat have done extensive research on the company by visiting company's facility and independent ground research. More detailed information of the company, please connect with the analyst. Disclaimer. Please read the disclaimer carefully before making any investment decision.